Wow, what a year 2025 has been. It was full of surprises, a lot of resilience, and some pretty big lessons for investors. So today, we're going to look back at the major themes that JP Morgan was talking about at the start of the year, see how it all actually played out, and try to figure out what it means for us heading into 2026. Ready? Let's get into it. Do you remember the start of 2025? It felt like everyone was holding their breath. Investors were really bracing for turmoil, and the headlines were just full of uncertainty. The big question on everyone's mind was, could the markets handle the pressure? So, were the experts right? Well, as it turns out, the real story was way more complex and honestly a lot more interesting than anyone expected. So, let's kick things off with the big one, the economy. The mood at the beginning of the year was, well, pretty grim. But what actually happened was a story of surprising strength. And this is where things get really fascinating. The prediction, right? Trade tensions, policy chaos, everyone thought it was going to slam the brakes on growth. But what JP Morgan called and what we actually saw was that a couple of other things acted like these incredible shock absorbers. I'm talking about super strong corporate profits and this just massive wave of investment in tech, especially all things AI. And this chart, it shows you exactly what I'm talking about. Yeah, hiring slowed down a bit in some spots, but GDP growth got this huge boost from one specific area, capital spending. Just look at that bar for technology infrastructure. It was a powerhouse, literally pulling the economy forward through all that uncertainty. So the big takeaway here for the economy is simple but powerful. Growth definitely bent. It felt the pressure, but it absolutely did not break. Those fundamentals were just way more solid than people gave them credit for. Okay, so the economy held up. But what about inflation? That was the other big worry, right? Everyone was kind of hoping it would just disappear. But nope, the reality was much, much stickier. So the warning from the get-go was pretty clear. Watch out for inflation that's higher than you expect because it's going to challenge your portfolio and eat into your returns. And that's pretty much what happened. Inflation didn't just evaporate. We saw this push and pull between inflation and interest rates, which, made it really tough to find a steady return. It forced investors to get creative and look outside the box. And what does outside the box even mean in this case? Well, it meant that suddenly these strategic diversifiers started looking really good. We're talking about things like hedge funds, actual infrastructure projects, and of course, the old classic inflation hedge, gold. The lesson from all this was crystal clear. If you were making big, singular bets, you were playing a really risky game. The winning move, without a doubt, was diversification. Spreading things out was key. All right, on to theme number 3, the good old US dollar. Man, there was so much talk about this. Is this the year dollar dominance ends? But the actual forecast was a lot more, let's say, subtle than that. See, they weren't calling for some dramatic collapse. The call was for a downtrend, not a downfall. And guess what? That's precisely what happened. The dollar did get a bit weaker compared to other currencies, but, and this is a big but, it was still the anchor of the whole international financial system, no question. And that's the absolute key here. A downtrend does not equal a collapse. The dollar's role is changing for sure, but it is not disappearing. Think gentle decline, not a free fall. Okay, so let's recap. We've got a resilient economy, stubborn inflation, a gently weakening dollar. You add all that up and you'd probably expect a meh year for the markets, right? But what we actually got was something nobody saw coming. It's what people are calling the everything rally. Let's just rattle off these numbers because they're amazing. First up, gold, a massive 26% jump on the year. Then you have emerging markets right on its heels with an incredible 23% gain. And the S&P 500, a super solid 16%, just shrugging off all that anxiety from the start of the year. And this chart just lays it all out beautifully. It wasn't just one or two things doing well. I mean, look at this. Gold, emerging markets, the S&P, European stocks, even global bonds. Everything delivered strong, positive returns. They all blew cash right out of the water. So what's the big story here? When you see a rally this broad, it tells you one thing. Investor confidence came roaring back. That early year anxiety, it basically melted away as the months went on. Okay, so that was 2025. Now for the most important part. What does this all mean for you? How do we take these lessons and build a playbook for 2026? Okay, so there are three huge lessons we should bake into our strategy. Lesson one, resilience is king. We saw that strong fundamentals can help an economy ride out some serious bumps. Two, diversification is not just a buzzword, it's essential. It was the best way to handle all that risk. And three, you gotta think globally. Even a weaker dollar still plays a huge stabilizing role in the world. So, looking ahead to 2026, where should your focus be? Well, if 2025 taught us anything, the playbook seems to point towards looking for broad opportunities all over the globe. That means keeping an eye on that tech innovation wave, for sure, and those infrastructure plays that were so key. And of course, don't forget about those alternative assets that helped everyone navigate that sticky inflation. You know, if there's one thing 2025 really hammered home, it's that markets love to surprise us. It was a year of resilience that almost no one predicted. And that leaves us all with one final massive question. What surprise is waiting for us in 2026?